and we are going to talk about Home Depot. So I want to bring in the chart here on the Thinkorswim platform. And for those of you that saw me on Thinkorswim or TD Ameritrade this morning, a little bit of this is going to be a review, but we're definitely going to go through it because I think it's really relevant. Okay, so first off, here's the chart. Okay, topped out here back in September. Christmas massacred this stock, and it's had a heck of a rally back. Now, a couple things. Let's talk from a fundamental standpoint first. Okay, just a macro standpoint first. And I'm doing that with Home Depot, and we don't do it about many stocks that we go over, but I'm doing it about Home Depot because Home Depot obviously is very, very closely correlated to the overall economy. And even though new home sales are just awful, the do-it-yourself, the refurbishing, the repairs, the upgrades, that is flourishing. That is totally flourishing. So from a fundamental standpoint, Home Depot actually seems pretty attractive. And I'm looking at some of the news stories offline here to see what kind of, if there's been any analyst upgrades, downgrades, any sort of earnings changes, guidance. And I don't see anything on that. Okay, so from the fundamental standpoint, I would be probably pretty bullish. Okay, now from a technical standpoint, and there's something that we have talked about this in the past, something called the 50% retracement. I'm going to put this up on a whiteboard here. Today is I can't believe it's almost the end of February already, and a brutal month it's been weather-wise here, but a great trading month. Okay, stock is 191, and I'm just going to put some notes on here. Fundamentally bullish. Okay. And what is the expected move? Let me pull this off here for a second. What's the expected move here? Anybody? Okay, 596, 610, 540. Well, we're right in the middle of two strikes, but we're not far off from the 190. So if we look at the 190 straddle, that's trading about $6.10. Okay. So, and the stock, I'm going to adjust this because we want to pick a point in time here. So the stock is actually 190.70. Okay. The 190 straddle is $6.10. Okay, but it's 70 cents in the money, right? The call is 70 cents in the money. There's 70 cents of intrinsic value. We want to look at that and say how much of that total price of that straddle is extrinsic value or theta or premium. So if we back out the 70 cents of intrinsic value then we get approximately $5.40. Now I'm looking at real time here. Now it's actually ticked up a little bit. And you can see here now the stock's down to 190.50 and we're up at about $5.50. So we're going to call it $5.50 for an expected move. Okay? So if we did look at that, then the expected range is 185.20 up to 196.20. Okay, now I can make a case again, both fundamentally and technically, being bullish and bearish. We made the fundamental case. Now, going back to this 50% retracement, okay, which is a Fibonacci type of indicator. If you take, and you can do this for any period of time, though the longer period of time you have, the better off the indicator is. But if you look at the high here of 215.43 and the Christmas low here, which was 158, let's see, 157.86. Okay, so a high of 215.43 and low of 157.86. Okay, if we look at the difference between the top and bottom there, it's $57.97. Okay. Okay, the difference is $57.97. The 50% retracement, the 50% retracement level indicator would be 57.97 divided by 2, which is essentially $34, right? 57.97, just like I have on here, David, is the difference between the high of 215.43 and the low of 57.86. Difference is 57.97. Okay? Half of that, which would be the 50% retracement, okay, so 57.97 divided by 2 is 28.99. Okay, everybody with me? Okay, so if we then take the direction of the way the stock went, so it went from top to bottom, okay, in this instance it went from the high of 215.43 down to the 157.86. If we add back that 50%, okay, if we add back that 50%, which we just calculated at 28.99, okay, so 157.86 plus 28.99 equals 186.85, basically. Okay? Now, that 186.85 would have been an indicator, a bearish indicator, because the 50% retracement, when that comes in, when that stock in this case has rallied back that 50% of the drop, that is an indicator that says the rally has come too far, there's going to be pressure on the stock, and we could see it dropping back down. Now, I will say that the stock did trade above that 50%, right? Because it's been hovering around 190. Okay, but that is why you see here this stagnation, this sideways trade over the last week. When the market has rallied so much over the last week, this stock has just been sideways. Here come the sirens again. I hope it's not another thing like this morning. Okay. David, you make a good point, a good valid point also. You also have the 200-day moving average here at 189.17. Okay. It hasn't quite bounced off of there yet, but that's why we're seeing this big-time consolidation here, right in this area. Okay, so what do I make from all of this? What I make from this is that it probably has just as much reason to go up from here, from a fundamental standpoint, as it does to go down from here, from a technical standpoint. And earnings are certainly going to, obviously, direct that. So, if we look at a situation like this, exactly, David, we look at a situation like this and say, you know what? This is kind of non-directional, right? Let's see if we can take advantage of something that plays both sides of the market. A move to one expected range or the other. So basically a move to 185 or 196. So what I was looking at was, and David, you saw this, this iron condor. This is about as close of an iron condor to the expected move as we're going to find. So let's see. We could look at a strangle swap as well, especially since volatility is really, really cheap. We'll get to that next. So let's look at this iron condor. So the 187.5, 185, and 195, 197.5 iron condor is trading about $1.30. So off the bat here, that's a really good price. It's better than 1-to-1 odds. But we want to get more than 1-to-1 odds, but see that the break-even range is at or outside of the expected range. Michael, I'm not really sure what the 196.30, 186.20 is. Oh, you're saying that, okay, I got you, the break-evens. Okay, gotcha. I was just looking at the reward to risk being over 1-to-1. So the break-evens, like Michael said, to the downside would be 186.20, and to the upside would be 196.30. How does that compare to the expected move? Well, it's a little light to the downside. The expected range is 185 and change on the downside. Upside, it's right there. So what I would do next then is say, okay, is there any technical support down around that 185, 186 area, because I'm a little light on that iron condor? 196.20, we know we're good to the upside, or 196.30 in terms of what the expected move is. But on the iron condor to the downside, it is a little light. And, besides the 200-day, which is just below the market, a dollar below the market here or so, I don't know that I would say that there's really any kind of significant support here. But, Michael, that support is up at 189. So if it breaks down below that, that's what I'm looking at. Where is that next range of support? Is there anything in the area of what this expected range is? The 185, 186 area. And, I wouldn't say there's really anything significant there. But for $1.30 better than 1-to-1 odds, maybe it's worth it. Okay, so that's one idea. The other idea, which I think Rob put out there, you put out potentially a strangle swap. And a strangle swap would be great. Again, non-directional, so we play both sides, up and down. And in this instance, volatility coming in to earnings is really darn cheap right now. So let's see. I'm using simple moving average, David. Okay, let's see if a strangle swap works. We can go to 185. Now on the upside, there is no 196 strike, so we're going to either have to choose 195 or 197.5. And I'm going to choose 197.5. So let's look at the 185, 197, excuse me, 197.5. There's these darn sirens again. There's got to be something going on here. All right, so this strangle swap probably costs 75 cents. Okay, at 75 cents, I don't love that setup at all. I don't like that graph at all. Yes, maybe I have lowered next week's volatility maybe a tad too low, but that's okay. I don't like that setup whatsoever. So, to me, if we were going to do something Home Depot, I would go with the Iron Condor. Any questions? So stock has dropped a little bit further from this point, from where we were before. Let's go back here. Let's see what this Iron Condor is trading. RR meaning reward to risk, David? On the Iron Condor? We already did that. If we're getting 130, and I'll just put it out here. $130 divided by 120 Okay, it's 1.08 to 1, which for a credit spread better than 1 to 1 is fantastic. It's just a matter of how does that come in line with the expected move versus the expected range. So does this make sense now? Because it's a $2.50 wide iron condor, right? The maximum amount the spread could ever be worth, whether the stock went to 0 or 1,000, is $2.50. Well, so if I take in $1.30, taking in $1.30 credit, and the spread can be worth a maximum of $2.50, then my reward could be the total credit of $1.30. My risk could be what's left of the value minus my credit, which is $1.20. Okay, glad it makes sense. Okay, any other questions? It is, Lionel. 100%. It is. So let me put the Iron Condor back up here and see what we have. Rob, I'd like to see, a little bit less than 1 to 1 reward to risk, and that graph showed me that, depending on volatility, it probably was not anything close to that. All right. Any questions? Let me do it right now, Rob. Let me put that up here. So, again, this is going to be more based on volatility than anything. Okay, in the adjusted volatility of where is vol going after earnings tomorrow morning. And we know that volatility will 100% go down. There's that is a guarantee. It's just a matter of how much. So I want to be very, very conservative in the estimates of my long volatility. So I could see this thing trading about 75 cents. And when I put up my risk chart, I mean, there's, unless I'm completely off with my volatility model, there's just no scenario here that I would like this regardless. Okay. All right, so I am not going to send a signal out yet in Home Depot. I do very much like the Iron Condor, but let's just see how the market is, it's selling off a little bit here. Let's just see what happens here over the next half hour, and see what happens in the stock, see what happens to volatility before we send this out. Okay? But this is definitely something on the radar to have a potential signal out there today. All right, let me wrap this up, get the video posted in the room along with the whiteboard notes, and I'll be right back, everybody.